You want to buy a property, but you're not sure when it's a good time to jump in? Watch this video. Most people are on the sidelines thinking whether it's a good time to wait or let the interest rates fall at some point and prices will hopefully fall down magically at that point as well. Well, let me tell you the truth. If interest rates were to rise, prices will drop, and if prices go high, interest rates will drop. It's a cycle which will never end. Here's what we know. Interest rates are at an all-time high and they aren't going to change them anytime soon based on the recent announcements. We also know inflation rates are at an all-time high, so it costs money to buy or borrow money at this point. We also know that supply is at an all-time low and demand is extremely high in this market. So let me give you an example. If you bought 2 years ago property for $1 million, for example, and the interest rate was 4%, and now that same property has dropped down to, let's say, $900,000, but interest rate is at 6%. Now it costs you the same monthly payment to borrow money towards buying that house. So let's get this straight. Your monthly payments won't change. Heck, you won't even be paying more towards principal in any situation. So why are we waiting for interest rates to fall or prices to drop? It's because we think everything's expensive and we can't afford it. And now we end up going into the savings mindset and coming from scarcity than abundance. Many people I speak to on a regular basis have money set aside just as savings in the bank account, making them no return on investment, or it's in an RSP or even equity inside of their property that's just dormant and not generating any return on investment. This is where you could use those funds and direct them towards an appreciating asset that even cash flows as a bonus. And now you're making a return on investment in the double digits on a yearly basis. To add to that, you can actually position yourself to be financially free in 5 years, in 10 years. Whereas with the money sitting in your bank account or a mutual fund, making single-digit return on investments, you will not be able to retire or be financially free in a short time frame. This is why it's crucial to not wait to buy real estate, but to buy real estate and wait. I understood this principle early in my years and always implemented it every time I made money from my day job. Any surplus amounts were always allocated towards buying a property. I also encourage many of my clients to do the same. And now one of the clients, for example, that bought a property a few years ago is able to be at peace with the high inflation costs and everything being expensive because she knows she has an asset that has doubled in value. She also knows that if she ever were to have problems financially, she has equity put aside for that rainy day. This is Chandra from the Chandra Real Estate Group. My team and I have helped dozens of clients in the Greater Toronto area reach their real estate goals. We are happy to hop on a free consultation call by clicking on the link below and exploring your options with buying, selling, or investing in real estate. All you have to do is click on the link below and we can hop on a call and discuss a no obligation discovery call. In this video, I will cover a high-level overview of the quarterly real estate market update in the Greater Toronto area. I'll cover things like the total transactions, new listings, days on market that it takes to sell a property, average selling price, and much more. Without any further delays, here we go. So for Freehold Properties, as we can see, the total year-over-year transactions is 5.2% less than last year. The seasonal change, however, so from last month to this month, we are seeing a 27% higher amount of transactions. Moving on, looking at the year-over-year average selling price, we can see that it's 7.8% less than last year, but it's 2.4% higher than last month. New listings. So how many more listings have come in the market? As you can see here in the graph, there has been 38% less listings in this market than last year, but 23% higher than last month. Days on market, I like this one because it tells you the health of the market overall. It tells you how long it takes to sell a property in this market. And as you can see, it takes 71% longer to sell a property than last year, but 54% higher than last month as well. So this is tricky. So when we look at all of these stats, we could tell that we've had a good year since the beginning of this year, but we've had a slow year compared to last year. Now, the media may do a good job in scaring you and saying that there's all doom and gloom and prices are declining, but the truth is we're on an incline since January of this year. And pay close attention to that, because if you're thinking of buying a property, freehold in particular, later this year, you might benefit the most by taking the plunge and jumping in now than waiting around in the sideline. Just to add to that, I'm going to talk about the condo stats as well. As we can see here, the sales have dropped 42% since last year in condos. The average selling price is now 11% less than last year. There are 19.9% less listings. Sales have dropped 20%. And the days on market has also increased by 125%. It's safe to say condos are not doing well this year, but are they performing poorly since January of this year? I think not. I think they are also on an incline since this year began. What does all of this mean? Well, for starters, we know that prices had hit a certain benchmark last year, and now we're at a lower price point. Will we hit that benchmark from last year? Most likely, yes. We may even pass it. So it's just a matter of time when prices climb up, and it makes sense to take the plunge and buy a property now if you plan to do so in the future, because you will see a good return based on historical data. The second point, I think, is also that if you have funds, but you're considering just saving it and maybe just putting it in a safer investment that you think is mutual funds, RSPs, GICs, think twice, because those funds may not even perform at the pace of our inflation rates. This is why I strongly consider scaling back and evaluating your finances. Where are you spending the most money? Maybe it's worth taking a step back and allocating those funds towards investments that grow in value. I know it may be a hard conversation to have with yourself or with a loved one, but it's a very important one to be able to position yourself 1, 2, 3 years from now to say, hey, I'm glad I did that, and now I'm at a much better position. Again, if you find this video helpful, please hit that like and subscribe button so I can continue sharing the knowledge I've learned over the years in real estate. I also don't think I know it all, and I'm always open to your suggestions and advice. So please comment below on what type of investments you find most useful, whether it's real estate or any other platform. I'm always open. Until next time, we provide results that move you.